Did you know that for most people, it takes roughly 66 years to become financially independent? That is, having enough money to stop working? But here's the fascinating part. By making just one change, you can shave off a whopping 14 years from that journey. What's that change, you ask? It's something we all can control, and it goes by the name of your savings rate. Today, we're going to discuss why your savings rate is perhaps the most crucial financial number for your financial future. Welcome to the Finance Virtuoso channel, where we talk about all things finance. If you're seeking a daily dose of valuable information on money, business, investments, and savings, be sure to click the notification bell and hit the subscribe button now. By the end of this video, you'll know more about savings rate and why it is immensely important. So, without further ado, let's get started. Reason number 1. Your savings rate speeds up financial progress. When we talk about how efficient your savings rate is, we're really saying that even making small changes to how much you save can make a big difference in your money journey. You don't have to save a super high percentage of your income, like 50% or 70%, to see good results. Actually, the biggest improvements come from those first steps, like going from saving 5% of your money to 10%. Here's a simple example. Picture yourself starting with zero savings. Your goal is to reach financial independence, which means having enough money saved up to cover your yearly expenses about 25 times over. If you can make your money grow by around 5% per year, it would take about 66 years to reach that goal by saving 5% of what you earn. But if you raise your savings rate to 10%, it would only take about 52 years. That's 14 years less. This happens because when you save more, the money you save and the extra money it earns grows faster. Plus, you show that you can live on less money, which means you need less money saved up to be financially free. Alright, now let's move on to reason number 2. Reason number 2, your savings rate is controllable. Your savings rate is something you have a good amount of control over. Most of us have areas in our budgets where we can make changes to spend money more wisely or cut out things we don't really need. This control lets us steer our financial journey in a positive direction. For example, you can think about different housing options, find ways to spend less on transportation, or maybe make small changes like skipping the daily fancy coffee. While there is a limit to how much you can change your savings rate, it's usually easier to adjust your budget and lifestyle than it is to change things like tax rules or how much money your investments make. The great thing is, you can change your savings rate as your financial situation changes. If you earn more, you can save more. If things are tight one month, you can save a little less. It's flexible unless you steer your financial journey in the right direction. Moving on to reason number 3. Reason number 3, your savings rate unlocks financial opportunities. Your savings rate lets you grab financial opportunities. One of the most obvious chances is when the stock market goes down and you can buy stocks at lower prices, like getting a discount at your favorite store. These discounted shares have the potential to grow in value significantly when the market eventually rebounds. Doing this regularly can help your money grow a lot over time. But it's not just about the stock market. Having a higher savings rate means you have more money available for opportunities that come your way. Maybe you come across a fantastic real estate deal, or a once-in-a-lifetime investment opportunity pops up. Your savings rate gives you the financial flexibility to jump on these chances, like being ready to catch a bus when it arrives. So, your savings rate is like your ticket to a world of financial opportunities. Now, let's move on to reason number 4. Reason number 4, your savings rate complements your finances. When you increase your savings rate, you often end up improving other financial aspects too. For instance, having a higher savings rate can reduce your tax bill. When you have more money to save each month and you put it in tax advantage accounts, you can pay fewer taxes either now or in the future when you start using that money for retirement. Additionally, increasing your savings rate today can set you up to save even more in the future. For instance, If you temporarily cut expenses to pay off debts, you increase your savings rate immediately. And once those debts are gone, you'll have even more money available for saving and investing. Having a higher savings rate and lower spending can also bring you greater peace of mind during challenging times. Whether it's a market downturn, a job loss, or a medical emergency, having some financial cushion allows you to think more clearly and make better decisions about your next financial steps when you need it the most. Finally, reason number 5. Reason number 5, your savings rate guides you to better financial choices. The fifth reason why your savings rate matters so much on your path to financial independence is that it guides you toward making better money choices. When you want to increase your savings rate, you have to either earn more money, spend less, or do a bit of both. While learning how to spend less, you often discover what truly brings value to your life. You figure out which purchases are worth it, either because they give you more stuff for your money, or because they make you genuinely happy. So you start directing more of your spending towards those important things. You might also learn how to do things yourself, which can save you money even after you become efficient at spending less. When it comes to earning more, you not only increase your income, but also acquire more knowledge and skills. These new skills not only boost your wages, but also make it easier for you to find better job opportunities, especially if you ever face a job loss. Plus, the discipline you gain from saving more money can help you make smarter financial decisions in all aspects of your life. So, there you have it. 5 simple reasons why your savings rate is the key to your financial success. It's about making small changes that can lead to big improvements, having control over your financial future, grabbing opportunities, making all parts of your financial life better, and getting on a path to better financial choices. If you found this information valuable, don't forget to give it a thumbs up, and remember, sharing is caring. So hit that share button too. Until next time, take care and stay financially virtuous.